Warren, just post the budget, have you made any major changes to allocations, to advice that you're giving across the board?
No, I mean, thankfully there were no nasty surprises this time around, so I think it was almost business as usual, as opposed to last year's budget where we had some horrible surprises. So no, this time around it's just all things normal.
Just a quick rating of the budget, do you give it the thumbs up, given the difficult balancing task rather that the finance minister had?
I do. I mean, I've listened to quite a lot of people who've been quite upset with the budget and saying that they haven't done enough to do job creation and they haven't done enough to promote small business. But I think some of the things they've done, which haven't really got a lot of airtime, I think were great. You know, appointing Dennis Davis to look at the whole tax system, I think is a fantastic move. Probably our brightest legal mind we've got, and somebody who understands business. So for me, that was a really good move.
So you celebrate the tax review that we're going to obviously go through?
I think people need to understand it. I don't think it's a case of just how do we get more tax out of the taxpayers. I think it's a case of saying what's the best way to collect tax, and I think what's the best way to promote our growth objectives. So if that's what it is, I think it's a great idea.
So let's focus now on offshore investing and whether you are advising people to keep a nest egg offshore.
To me, if you're investing overseas, you're doing it for long-term strategic reasons. I don't take the view that you trade overseas investments. In other words, when the rand's sitting at 7 to the dollar, I wouldn't then say, okay, now's the time to send your money overseas, and when it's at 9, bring it back. To me, the difficulty with trying to predict currency movements is so huge that I just don't think you can forecast it with any kind of accuracy. So typically, I would structure my overseas investments around my own spending patterns. In other words, if I know I'm going to retire and spend a lot of time overseas on big holidays, then I would have more money overseas. If South Africa's home and I'm not going to make any major changes and I'm not going to travel a lot overseas, then I would say the bulk of your assets need to be here, and you would only want a small portion of your money overseas just to get the diversification.
What structures should one use when you're looking to invest offshore?
So if you're a private individual and you're doing it and you're investing overseas with a reasonably small amount of money, to me you should be using rand-based overseas investments. It's probably no surprise to you that I love the ETFs, the indexed investments, and I think for a lot of people those are things that they don't really look at. So in South Africa you get these DBX trackers where you can buy almost any international index nowadays from South Africa on the stock market using your own share portfolio account. What a wonderful way to get overseas exposure.
Overseas is a big place. Can we narrow it down?
Well, I think if you're starting and it's your initial investment overseas, then I think getting a world index is by far the best thing to do. I know it's really boring and it doesn't make for great conversation, but the point is you're getting exposure to every major market, every major company that you need to get exposure to, and you're doing it with one share, one investment.
So it's a lifestyle-based investing, which is what you are throwing forward to?
Definitely. I think you've got to match your costs to your capital. So if your costs are rand-based, then the bulk of your capital needs to be here. If you like overseas because you're going to spend overseas, then that's the way to go. I think for higher net worth people that are going to send more money overseas, I would go direct. In other words, I would actually go and apply to send my money overseas. I mean, nowadays you can do $1 million a year without any
tax implications.
What a pleasure, yeah. And well, not so much tax implications. Yeah, you don't need to fill out tax clearance forms, and you don't need to go through a whole process. You just send your money out. And from that point of view, I would then go and actually open up a direct portfolio overseas. In other words, a direct stockbroking account. And I think there's nothing wrong with buying a few of your big brand names, big companies that we can't get access to in South Africa.
On that point, we don't have direct access to big IT companies anymore, with Dimension Data having disappeared. We've got Data Tech in the fold. But if you want exposure to the likes of Apple and Microsoft, etc., you're going to have to go overseas for that exposure.
Absolutely, and pharmaceuticals. I mean, just two of the industries that we know long-term are industries that are core to the demographics of a population like ours, and we just can't buy them. So
well, we do have Aspen and Adcock. Do they not highly rated in your view?
Not from the point of view of rating them as a company, but more to say, well, they don't own the kinds of rights to drugs that we all use. So I think it's those kinds of patents, I think, that you would be buying more so than saying, just on a specific investment case. I mean, I tend to think that, a guy like Warren Buffett would tell you, you want to buy a company that's going to be around in 40 or 50 years and selling drugs that are in demand in 40 or 50 years' time.
Just on that point, now that they appear to have discovered a cure for HIV in the baby that's hitting the news flow at the moment, do you think we're going to see a dramatic re-rating of pharmaceutical companies across the board? I suppose I'm treating you a bit like an asset manager, but it is the news of the day.
Well, I think in terms of news of the day, I mean, it's great news. Should you be making an investment decision based on that? Definitely not. I mean, I think also what's interesting about HIV is it's become something that's more manageable now already with drugs. So if you think back 20 years ago, it was almost an immediate death sentence. Nowadays, people are living for decades with AIDS, with HIV, no problem. So I think it's less of a earth-moving design or earth-moving implementation than we saw in the past.
Let's talk now about the local equity environment. I know you're a big fan of equities. What is the risk situation when it comes to investing in the South African universe at the moment?
I mean, it's a relevant question. I think a lot of people are worried about it. You know, is our market overvalued? The index is at 40,000. Well, let's just start there. An index level of 40,000 doesn't mean a heck of a lot to anybody, because I think we have to look at the PE ratio of the market. The PE of the market is, let's say, it's 15 at the moment. That's not incredibly expensive in our history. You know, long term, our PE is about 14, and you should be panicking when the PE gets to 20, 21. Then you know that your trouble's coming. You just don't know what day. So at 14 or 15, I'm not too worried. I would say, though,
you should still be investing then in equities.
You should be in equities, and certainly long-term investors, you know, you're looking at the income from your shares, in other words, your dividends. That's really what should be getting you excited, and you should be looking for high dividend-generating companies that have a good prospect of generating future dividends.
Is that one of the top themes in your book, looking for dividend generators?
Always. I think it's hard I'm not saying that CEOs lie, but it's difficult to lie about a dividend when it's in your bank account. It's difficult to lie about a growing dividend, and that it's difficult to hide problems when you're paying nice dividends. So to me, dividends are a big issue. I wouldn't say that our entire market is cheap. I think there are sectors that do worry me. You know, I mean, our cash retailers, I think it's no news. Everyone's worried about those. Quite a few of our dual listeds, because overseas investors are looking for income, and they're looking at our companies to generate that dividend for themselves overseas. So those are companies that I would be worried about. But having said that, I mean, look at the platinum sector. So many problems. You know, the news is horrific about platinum shares, but that's really where the opportunities are. You know, the value is in our resources sector now.
So you love the value investors and that theme, looking for the beaten down stocks. Touching on other asset classes, listed property, cash, bonds, anything else that stands out?
I'm a long-term fan of listed property. I always have been. I think our asset managers in particular are structurally underweight listed property, and I find that very frustrating. But I mean, on a short-term trading basis, I would be scared of just jumping into listed properties now. They had a fantastic year last year, on top of a few fantastic years in a row. So whenever you see a sector...
Are you saying you don't think that the momentum is sustainable?
I think it's... I don't say... no. I mean, you can't with any will in the world say I'm going to buy listed props now and expect another 30%.
But they have defied the odds for a long time.
Sure. So what I would be saying to you is maybe now is the time to feed into that market if you've got capital to go in, but don't expect to get 30% next year or the year after it. You know, if the income from those listed properties continues to beat inflation, which we expect them to do, then great. You know, that's why you're buying them. You know, buying for the yield again.
In terms of the budget speech, expecting 5% inflation going forward, do you think that is a little on the low side, maybe too optimistic?
Yeah. I mean, I think without doubt, I think, you know, inflation is always going to be a debate point, and certainly my experience with my clients is their inflation rate is running much closer to 10% than 5%. So I'm sure that 5% is true somewhere, but certainly not my experience.
What is the best way to protect yourself from inflation? Of course, there are those who continually say that equities are the best place to beat inflation.
There are three main productive assets, and to answer your question, the best way to protect yourself against inflation is buy a productive asset. There are three of them. Shares, always have been, should always be. Commercial property, whether you do it via a property company or direct commercial property. And then the last one, which is difficult for most of us, is farming land. I mean, it literally is a productive asset. So that's not really a class we can focus on. So I mean, commercial property you can buy through the listed market, and shares, and those are the two main ones.
Coming back to overall themes right now, you mentioned that you wouldn't play or you wouldn't make investments on the back of a rand forecast. We know how extremely volatile the local unit is. But you must have given some thought and obviously engaged with a number of experts in the currency space. What are your thoughts in terms of where we're headed? I'm not asking you for crystal ball gazing here. I'm saying, are we going to see dramatically weaker in your opinion, or are we going to see the rand settling at current levels, there and thereabouts?
So I have spoken to a lot of experts, and my conclusion is nobody's got a clue. So I mean, I think that
I must give up interviewing them as well.
Exactly. I mean, I think just to give, I mean, that point is an average economist, when you poll all the economists in the market and you ask them about the direction of the rand, they're right on average 30% of the time. So let's not give too much credence to their predictions. And let's not give any credence to what I'm going to tell you. But my point there is, I think the rand is definitely, it always moves in steps. In other words, it either goes dramatically too cheap or dramatically too expensive. And I think we're in a situation now where it's taken a major step to 9 to the dollar, and we know it'll come back. It's
so you have a fair value of what, 750, 8 on dollar rand?
I mean, I think if you look at 8's a reasonable value for the rand at the moment.
And it will always retrace to that fair value in your opinion?
Well, what will happen is it'll go all the way to the other side again, and we'll be talking about 650 at some point again, I'm sure. Just can't tell you when. But the point is, you've got to look at the long-term mean, and the long-term mean is somewhere around there.
So, Warren, if you were to give one piece of overriding advice for 2013, and now you've got to put your thinking hat on because it's got to come in soundbite format. What would that advice be? I think it's a year not to get too excited. In other words, don't get too excited about the market carrying on like it did last year. It's not going to do that. And at the same time, don't panic if we hit some trade wins and things look rocky. It is going to be a good year. Stay the course and stay in your equities.